Today, we're tackling something many of us face with, let's say, a sigh of resignation: car insurance. It feels like we're either deciphering a tax form or just blindly picking the cheapest option, often wondering if we're truly protected. We're going to fix that. Our mission today is to take a very specific real-world scenario: a Phoenix renter driving a 2018 Toyota Corolla with a recent at-fault accident on their record, and show you the actual dollar difference for robust, optimized coverage. You'll walk away from this deep dive with a precise, actionable path to get your own live quotes and a clear checklist to ensure you're covered without overpaying a single cent.
Yeah, it's truly striking how many people believe they have to, cut corners on protection just to save money. This deep dive will lay out the proof that you can be both incredibly well protected and financially savvy, especially when navigating the unique driving landscape of a city like Phoenix.
Okay, let's quickly sketch out our listener's persona for today. Imagine you're 29, you rent in Phoenix, and you're driving about 12,000 miles a year, mostly commute and errands. Your credit is, let's say, mid-range, and you're financing your 2018 Toyota Corolla, which of course means comprehensive and collision coverage are absolute must-haves.
Non-negotiable there.
Exactly. You've got one at-fault accident on your record from the last 3 years, nothing super serious, no DUI, and thankfully no lapse in coverage. And importantly, you're open to trying telematics if it genuinely puts dollars back into your pocket.
Okay, and this persona is particularly relevant for Phoenix because the valley's driving conditions, well, they elevate certain coverage elements from merely optional to genuinely essential. We're talking heavy freeway corridors that are, shall we say, glass unfriendly due to the heat and grit. You know how it is.
Oh yeah, chips love those freeways.
Exactly. And there's a notable presence of underinsured motorists. This makes underinsured motorist, or UMUIM, and glass coverage, not just line items on a policy. They're critical shields against a bad day turning into a full-blown crisis.
Okay, good point. Just a quick but important note before we dive deeper.
Yeah.
This deep dive is for educational purposes only. It's not personalized insurance, legal, or financial advice. Always, always read your specific policy documents and speak to a licensed professional for your unique situation.
Got it. Good. So with that persona and the Phoenix context in mind, we really wanted to level the playing field for our comparison. How do we ensure we were truly comparing apples to apples in terms of coverage? And what exactly does 51-50 mean for someone maybe new to insurance jargon?
Great question. To make sure we had a consistent, optimal baseline, we locked in a single set of coverages that Phoenix drivers genuinely rely on. So when we say liability limits at 51-50, that breaks down like this: $50,000 for bodily injury per person.
Okay.
$100,000 for bodily injury per accident.
And $50,000 for property damage. These are pretty standard ways to ensure you're covered against common liabilities if you're at fault.
And what else did we bake into this foundational coverage blueprint? What were the other key pieces?
Critically, we included UMUIM at 5,100, mirroring those base liability limits. This is your protection against someone else's lack of sufficient insurance. Think of it as a safety net, catches you when the other driver's policy is too thin to cover your costs.
Essential.
Totally. We also added medical payments, or MedPay, at $5,000. It's a relatively inexpensive cushion that pays quickly for initial medical costs, regardless of who's at fault. Often bypasses the slower claims process.
Right. And for our listener who's financing their Corolla, comprehensive and collision are non-negotiable anyway. What deductibles did we set for those?
We went with $500 deductibles for both comprehensive and collision. Seemed like a good, balanced starting point for most people.
Okay.
Then, because nobody wants to be stranded, we included rental reimbursement at $40 a day for up to 30 days. That's crucial when body shops are backed up, which they often are.
Definitely.
Roadside assistance was also a standard inclusion. We started with standard glass coverage, but, with a strong mental note, maybe even a recommendation, to price a full glass endorsement, especially if your routes involve long freeway stretches or construction zones.
Good call. And to make the comparison completely fair, what common discounts did we factor in from the start?
We requested all the usual suspects: auto pay, e-docs for paperless statements, a basic defensive driver course discount, and crucially for our persona, a renter's bundle, if it was available. This was our consistent blueprint for what we considered truly optimal coverage in Phoenix. Not just legal, but optimal.
Okay, so when we put this consistent, robust blueprint to the test for our specific Phoenix persona, what kind of price range did we actually see across different carriers? Were there any big surprises in those dollar amounts?
What really jumped out at us, when we ran these numbers, was the dramatic variance. even with identical coverage, like exactly the same. For this specific persona and coverage setup, the illustrative monthly quotes were quite telling. Progressive came in around $139 a month.
Okay.
GEICO was around $164 a month.
Mm-hmm.
And State Farm around $181 a month.
Whoa, wait. A $42 a month difference for the exact same protection.
Exactly.
That's over $500 a year just sitting on the table. From your expertise, what's really driving that kind of variance between carriers for the same profile? How do people miss savings like that?
That's a fantastic question, and it's a critical insight. It's not just about what you drive, it's who you are, your driving record, your credit in some cases, and critically, how each carrier's unique underwriting model interprets your risk. Some carriers, like Progressive, maybe their algorithms are a bit more forgiving of a recent accident for a driver with an otherwise clean record, especially if they're open to telematics,
Right, the driving track.
Yeah. Others, like maybe State Farm, might weigh things like loyalty or bundling with a local agent more heavily, even before specific discounts kick in. Each company has its own sort of secret sauce for pricing risk. And that's precisely why shopping around with a consistent blueprint is absolutely non-negotiable. You just have to.
That makes so much sense. Now, let's talk about the immediate temptation. Because when people see these numbers, that siren song of minimum legal coverage gets pretty loud, right? Especially when trying to save a buck. But for someone in Phoenix, is that really a smart move?
If we connect this to the bigger picture, in a metro like Phoenix, where UM really matters, and let's be honest, windshield claims aren't hypothetical.
No.
Minimum legal is often a price you pay twice. You save a sliver up front, sure, but you're essentially buying risk you can't control.
Yeah.
I actually remember a client once who opted for minimum legal, thought they'd save maybe $20 a month. Then a seemingly minor fender bender turned into a huge headache. Medical bills, mostly, because the other driver was uninsured. Yeah, that's the price you pay twice we're talking about. On our same persona, with minimum legal, you might see Progressive maybe around $118, GEICO $139, State Farm $152. Yes, it's lower, but it's definitely not free in terms of risk. The savings you see on paper, they usually come from gutting crucial protections, reduced liability depth, that critical UM coverage, and practical things like rental reimbursement that you only notice when you're suddenly without a car.
Yeah, when you really need it.
Exactly. That trade-off is almost never worth it in the long run. If you truly need a softer payment, the smart way is to stack the discounts you actually deserve. Right-size your deductibles to something you can comfortably cover without panic. And keep the core protections, the ones that prevent a bad day from becoming a bad year, financially speaking.
So it's not just about the raw numbers. It's about finding the carrier that truly aligns with you, your habits, your preferences, not just what Google spits out first. How does someone's personal style, maybe, influence which carrier is the best fit, even if the prices end up being somewhat similar after discounts?
This is a really important question for optimizing your insurance, not just buying it. We can broadly categorize our persona into maybe 3 types, and each might find a different carrier feels like the optimal choice for them. First, let's talk about the saver. If you're disciplined, detail-tolerant, you don't mind dealing with things online, and you're perfectly comfortable with a modern self-service app.
Okay.
Progressive's pricing edge in this specific scenario makes it a pretty easy recommendation based on dollars alone. Their whole model often leans into rewarding drivers comfortable with digital interaction and, crucially, open to telematics. Their algorithms can really favor newer policyholders or those willing to prove their safe driving habits. That often translates into some of the most competitive initial rates.
So it's for the saver.
For the saver, yeah. Say yes to that telematics trial. Drive like someone you actually like is in the passenger seat for a few weeks. Keep your UM strong, don't skimp there. And definitely bundle that renter's policy if you haven't already.
Makes sense. What's the next type?
Then there's the split the difference driver. Maybe you value a clean app flow, appreciate a slightly more established brand name perhaps, and you tend to pay your premium in full to scoop an extra percentage off.
Right, the pay in full discount.
Exactly. For this driver, GEICO in the mid-160s is a perfectly rational middle path. It offers a good balance of cost and convenience, generally a smooth digital experience. Just remember, for this type especially, mark your calendar to reshop at 12, 24, and maybe 36 months after that accident date, because those surcharges fade and carrier rates refile all the time.
Good reminder. And the third type.
And finally, let's call them the concierge type. If you're service forward, you like having a dedicated agent you can call, someone to help fine-tune your limits, maybe explain things. Or perhaps you plan to have other insurance lines like an umbrella policy and maybe landlord coverage down the road.
Okay, more complex needs.
Right. In that case, State Farm can often justify that higher initial premium. Their agent-centric model usually means more personalized advice and potentially deeper bundling discounts when you bring all your policies under one roof. That higher starting quote might shrink pretty significantly once you factor in a robust bundle and maybe some agent-specific insights or discounts.
It's important to remember, too, that households naturally move between these identities, right? Life changes. Maybe teen drivers join the policy later, you buy a home, add a second vehicle.
Okay, great.
Your insurance should flex with your life, not the other way around. Okay, before we even think about shaving more dollars, what are the absolute non-negotiables for our Phoenix driver? What should they promise themselves they won't cut, no matter how tempting the instant savings might seem?
Think of these as your insurance shield, okay? For this persona in Phoenix, these elements are just critical, non-negotiable. First, keep UMU at parity with your liability, so $5,100 at minimum in this case. Just imagine getting hit by someone with bare minimum coverage, or worse, none at all. Without strong UMU, your medical bills, your car repairs, suddenly that's potentially on you. It's really about protecting yourself from someone else's poor choices or bad luck.
Essential firewall.
What's next?
Second, seriously price full glass coverage if you spend any real time on the freeways. And let's face it, if you've ever driven on I-10 or the Loop 101 during rush hour, or any time really,
Yeah.
you know Phoenix windshields practically have a bullseye on them from all the rocks and construction grit. A single tiny chip can turn into a spiderweb crack by lunchtime in that heat. You'll really wish you added it then. It's almost preventative here.
Absolutely. And don't forget rental reimbursement. Body shops are incredibly busy these days. Parts delays happen. And rideshares aren't nearly as cheap as they feel when you're booking them daily for weeks on end, potentially.
Exactly. You need that bridge to stay mobile, get to work, live your life.
What else is on the must-keep list? And hold MedPay at $5,000 if you can possibly swing it. It's relatively low cost for what it does. It's low-friction help when you need it most, often covering small copays or initial medical bills without a lot of hassle or waiting. Finally, be really deliberate about your deductibles. $500 is a balanced place to start, we think. But if you have a rock-solid emergency fund, you could model $750 or even $1,000 for slightly lower premiums.
But only if you have the cash ready.
Only if you have that cash readily available. If you don't, set the deductible you can genuinely pay without panic. This isn't about saving a few dollars on the premium now, only to face a crisis later when a claim actually hits.
So true. Okay, we've talked about protecting yourself, picking the right carrier for your style, but the real game changer for those looking to optimize without compromising, that seems to come down to mastering the art of what you call discount choreography. These are the smart moves to maximize savings without sacrificing a single bit of that essential protection.
You're absolutely right. And some are easier than others. The renter's bundle is probably the easiest lever for a Phoenix renter. Pairing even a basic cheap renter's policy with your auto often unlocks double-digit combined savings. It's almost always worth it.
Okay, low-hanging fruit there.
Definitely. And for telematics, I know some people hesitate. Privacy concerns, feeling watched, whatever. My advice, try it for a month, maybe 2. See if the data collection feels intrusive to you, or if the discount you're offered is compelling enough for your driving style. You can almost always opt out if you hate the behavioral feedback or the app nags.
So it's not a lifetime commitment.
Not usually, no.
Yeah.
It's about making an informed choice, not blindly accepting or rejecting it based on what you've heard. See what your discount would be.
And a recognized defensive driver course. Worth it.
Often, yes. They're usually cheap, pretty fast to complete online, and accepted by many carriers for a nice little discount that can last a few years. Just, verify the provider is approved by your specific insurer before you sign up and pay.
Good tip. And don't forget the easy wins, right? Like eDocs and AutoPay. They seem tiny.
They seem tiny individually, maybe a few bucks here and there, but they're compounders over time. Free money, basically. Take it. Also, your annual mileage. It matters more than people realize. If you truly drive 12,000 miles a year, don't just guess or self-report 15,000 out of habit. That difference can impact your rate. Be accurate.
And the car's features.
Yes. Make sure every safety feature on your vehicle's specific trim level, anti-lock brakes, airbags, anti-theft, lane assist, whatever it has, is accurately checked in the quoting app or mentioned to your agent. Those can trigger discounts. And please quote all regular drivers and all vehicles accurately right from the start. Saying, oh, we'll add them later is often how discounts vanish and nasty premium surprises appear down the line when you finally do.
Okay, solid advice. Now, this next one is a real potential game changer that I think most people completely miss. Leveraging time itself as a money-saving lever. Tell us about that.
Yeah, this is powerful because time can really work in your favor with insurance rates, especially after something like an accident. An at-fault surcharge. That extra cost added to your premium. It's loudest right after the incident, and it gradually fades with age over usually 3 to 5 years depending on the carrier and state.
So it doesn't last forever.
No, it doesn't. Plus, carriers refile their base rates constantly. Your own situation changes. Maybe your ZIP code, maybe your credit improves. Even your daily driving routes can look different season to season, affecting mileage. So, waiting for your official renewal notice in the mail. That isn't some hard and fast rule. It's more like a rumor or just inertia.
Okay.
Insurers prorate unused premium. If you switch mid-policy, they owe you the unused portion back. So if the math turns in your favor on day 143 of your 6-month policy term because you found a better rate elsewhere, that's effectively your new renewal day. I see. Put reminders on your calendar seriously. Do it now for 12 months, 24 months, and 36 months after your accident date. Set an alert. This isn't busy work. It's how ordinary households can reclaim hundreds of dollars over a few years without trimming a single necessary protection. It's like letting money sit in a bank account that doesn't pay any interest if you don't check.
That's a great analogy. Your insurance premium is constantly being reevaluated behind the scenes, and that accident surcharge isn't a life sentence. That calendar reminder is like your personal savings alarm clock.
Exactly. It prompts you to take 15 minutes and check the rates again.
And while we're undoing myths, just having an at-fault accident by itself doesn't usually mean you need an SR-22 filing in Arizona, right? People get scared about that.
That's correct. SR-22 is typically tied to specific, more serious violations like DUIs, driving without insurance, license suspensions, or legal judgments. Not usually a standard fender bender. If you're ever unsure, just ask your agent directly. Don't self-penalize or pay higher rates somewhere, assuming you need it based on some horror story you heard from a cousin's group chat. Get the facts for your situation.
Excellent clarification. Okay, let's gather all this wisdom and look at the math you can feel. The bottom line. On our balance blueprint, remember, liability 501-5010 versus the UM 5100, MedPay $5,000. Those $500 deductibles, rental and roadside included. The difference we saw between Progressive, around $139, and State Farm, around $181, was a staggering $42 a month. Just from shopping with the same coverage. That's $504 a year right there, instantly potentially left on the table if you didn't compare.
Just by getting those quotes.
Now, layer on top of that, run the renter's bundle discount. Give telematics a fair shake for a month or two, see what happens. Accept those clean little credits like eDocs and AutoPay. Suddenly, you watch that annual savings creep towards $600, maybe even $700 or $800, depending on the carrier and your specifics. All without touching the crucial parts of the policy, the parts that actually carry you through real problems.
Exactly.
We're talking about putting potentially $600, $700, maybe $800 back into your pocket annually. I mean, that's like getting an extra car payment covered or a really nice dinner out every single month that you weren't expecting. That's real money.
It really is. And in a city like Phoenix, where, a chipped windshield can become a crack by lunchtime, and where, unfortunately, not everyone you share the lane with has enough coverage to make you whole after an accident. That balance, finding significant savings without getting your actual protection that truly matters, you're not just buying coverage, you're building a financial fortress around your well-being, optimized specifically to your life and location.
Well said. Okay, if this deep dive saved you time, taught you what protections to fiercely keep, or maybe just made the numbers finally click and make sense, we've got 2 quick things for you that take less than a minute combined and could genuinely pay you back all year long.
Worth doing.
First, use the top link in the description right now. Pause us if you need to get your 3 live quotes for your exact details. Same coverage spine we talked about, but real rates based on today's filings for you. Second, grab the free coverage fit checklist in the next link. It's just 1 page, travels well electronically or printed from state to state, and it's like that quiet guardrail that stops cheat from accidentally becoming, oops, I'm underinsured.
It's a great little tool.
Then hey, come back and tell us who you are. In the comments below this deep dive, post your general persona, your state, rough age bracket, vehicle type, mileage band, maybe what's on your record, like one accident or clean. We'll use that. We'll build upcoming deep dives from the most requested scenarios. That's how this show stays personal and relevant, and how you help other drivers who look a lot like you but maybe don't have your head start from listening today.
Remember, you don't have to choose between cheap on one hand and fully covered on the other. You really do get to choose optimized. Smart savings, solid protection.
So go get those quotes, download that checklist, and remember, you're not settling for cheap. You're building smart. Until next time, drive safe, breathe a little easier knowing you're informed, and keep those insights flowing.